Realty Income stock has had an interesting year so far, to say the least. Now, from the massive $950 million investment in the Bellagio Las Vegas to the recent huge Spirit Realty acquisition, or maybe the fact that the stock at one point, as of recent, a few months back, was trading in the mid $40 level. Without a doubt, 2023 has been quite a roller coaster ride for the monthly paying dividend stock. But through all this, I personally have been stacking up shares of Realty Income like crazy, and if you've seen my videos before, you know I talk about it all the time. I bought Realty Income's dips and Realty Income's rips, and out to the point to where I'm currently holding around 2,900 shares, which pay me upwards of $700 in dividends on a monthly basis. Now in this video, I want to go over three specific reasons, on why I think Realty Income is a smash buy opportunity as of right now, and why I think 2024 and beyond will be huge for this REIT. Now, if you hold Realty Income or maybe plan on it in the future, stick around, drop a like down below, and let's get into the first reason. Now, the first reason, probably the biggest reason of all on why I think Realty Income is going to really do well next year in 2024 and beyond, is because of the simple fact that we are most likely all done with the Federal Reserve raising interest rates. Now, of course, never say never. There's still always a chance that we could see another 25 basis point hike in the up and coming few meetings. But looking through the Fed rate monitoring tool, this pretty much shows the probability of different interest rate hikes, cuts, or if they're going to be left alone throughout multiple different meetings in the future. And to give you an idea of what things are looking like as of at least filming this video. Currently, as it sits, the central bank has interest rates at 5.5%, which I'm sure most of you guys are aware of. Now, before we go through all the different meetings and I show you the probabilities of future rate cuts, for those investors listening along that aren't that aware, when interest rates are much higher, which they currently are as of right now, real estate investment trusts or REITs have a lot harder time expanding or even servicing the debt that they already have. Because when interest rates are higher, money is more expensive to borrow, which can definitely make it tough for some companies and especially for real estate. Historically speaking, when interest rates go up higher, real estate values go down, because there's just not necessarily as much money to make when rates are sitting sky high. But now looking through the next few meetings, this is what I'm talking about. As of January 2024, as of right now, it looks like there's about a 90% chance that the Fed basically leaves rates alone, a 10% chance of a rate hike, and a 0.3% chance of a super rate hike, if you will. Now moving forward out to March 2020, you can see that there's starting to be a higher chance of a rate cut. Now, I've said it before and I'll say it again, I have no idea what the Federal Reserve is going to do in the future. It of course depends on a lot of things like where inflation's sitting, etc. But in the future, in March and maybe even May, there's a pretty good chance, at least how things sit as of right now. Keep in mind, things can change, but as of right now, it looks like there's going to be at least some small rate cuts about mid-time next year. And if we zoom out even further, way further, let's talk about September of next year. We're looking at a small percentage of even a 4 to 4.25% interest rate. And the majority of the probability right now is in at a 4.75 to a 5% interest rate. Now, don't get me wrong, even the best case scenario throughout next year looks like interest rates are still going to be held decently high, at least compared to what we saw a few years ago. But because the majority of Realty Income's debt is fixed, and a lot of the debt isn't maturing for at least a few years anyway, Realty Income is going to be sitting pretty good, at least for the next few years. And especially if rate cuts are coming within the next year or so, we could see real estate really start to benefit from it. Now, the next reason on why I think Realty Income is a smash buy opportunity is because of the fact that the market is starting to re-enter into real estate and a lot of money is being pumped into the system. If we look at the Vanguard Real Estate Index ETF, this is VNQ. Side note, one of the best real estate ETFs if you haven't looked into it already. But VNQ just recently hit a low of around $70 per share, and now just about a month or so after is trading at $80 per share. And even though VNQ is down 3.39% year to date still, this ETF is making a comeback. And what it looks like to me is that the bottom is most likely in when it comes to real estate at this point. Again, unless there is some sort of massive black swan event. But from here on out, I could see money being pumped back into real estate investment trusts. And I think Realty Income is going to benefit from this greatly. Now, there's of course many reasons, but in this video, at least the last and final reason on why I think Realty Income is a smash buy opportunity as it sits as of right now, and with Realty Income still trading as low as it is, Realty Income is offering a starting dividend yield of around a 5.7% starting dividend. Now I get it, I can already hear you all saying, well, right now you can put your money in a money market account and make around 5% risk-free or a CD, etc., etc. And by all means, I think those are also great ideas. I personally right now have quite a bit of money in money market accounts as well as CDs for that reason. But when it comes to Realty Income with a starting yield of 5.7% and a REIT that increases their dividend basically every single quarter, which side note, we should be getting another dividend increase very soon here. A starting 5.7% yield, which the yield on cost is only going to go up with future dividend increases. And the fact that as of right now, I think Realty Income is much more than just a dividend play. Earlier this year, as Realty Income was selling off, I really didn't care all that much because I've been stacking up shares of Realty Income for the dividend, and I've been reinvesting the $700 or so I've been getting on a monthly basis, at least for the last few months, into more shares of Realty Income, shares of schd, and some of my other favorite stocks and ETFs. But ever since Realty Income's low of around $46 and some change, Realty Income has recovered like crazy since then. And I think Realty Income within even the next 6 months could easily be trading at $60+ per share. Now just think about this in theory. Of course, we don't know what's going to happen, but if and only if Realty Income recovers and starts trading near $60 or even upwards of $70 per share, which keep in mind Realty Income was trading well above that not all that long ago. Picture this, that Realty Income is trading at $70+ per share sometime in 2024, and you're holding on to shares of Realty Income with a cost basis of just around $50 per share. Now in that situation, you would not only be up like crazy on the actual share price of Realty Income, the price return, but also on top of that, you'd be locked in with a 5.7% or so dividend yield. Which honestly, as a dividend growth investor, I honestly can hardly think of a better situation. Now there's a few reasons on why I've been buying so much Realty Income as of lately, and I'm going to tell you the main reason just here in a second, but one of the main reasons is the fact that Realty Income has a super high quality, diversified portfolio of different grocery stores, convenience stores, dollar stores, and a lot of different names that I would consider for the most part pretty recession resistant. And even though there are some names within the top 20 client list, names like Walgreens, Dollar General, Dollar Tree, and others, that some Realty Income bears have been sort of pointing out, saying that these names aren't doing all that hot as of right now. And those are some of Realty Income's top clients. A lot of people don't realize that Realty Income has over 13,250 commercial properties with over 1,300 different clients. This is a mega REIT. Realty Income is not the small little baby REIT it was even a few years back. And there's honestly some pros and cons to that. I would say one of the pros are the fact that it's even more diversified, which makes it more of a sleep well at night REIT in my opinion. But one of the cons is that Realty Income might be almost too big for its own good now, which means that there could potentially be less growth opportunity compared to those that bought into Realty Income, say, 5 or 10 years ago. So there we have it, just a few of many reasons on why I think Realty Income is still a smash buy opportunity, why I've been buying shares of Realty Income like crazy, and why I personally think things like the Fed lowering interest rates, cutting interest rates sometime next year and beyond. For long-term dividend growth investors, Realty Income trading in the 40s as of recently was a crazy opportunity. Realty Income now trading in the 50s is still a buying opportunity. But once Realty Income is back up to $60 or $70 per share, which I think could happen within even the next year, I know a lot of us are probably going to think to ourselves, man, I wish I would have bought more Realty Income when I had the chance. But now I want to hear from you guys down below when it comes to Realty Income or any stocks or ETFs that you guys have been buying as of recently. Drop some ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.